Hey, sexy people, it's Mark Yagi, and we have a yellow market, and that means I don't know which way it's going to go up, down, sideways. I'm not sure. So I'm going to give you three stocks that you could short if you want to play the bearish side, or four stocks that you could get ready to buy if you want to play the bullish side. And then you get to decide and start your research from that position. But the market is yellow. If you take a look at the screen, you're going to see what I'm talking about. If you look at the screen right now, you could see two green lights, and we don't know which way that it's going to go. I feel like it's going to go to the downside, but I can't use feel as my indicator. So what I'm going to do is I'm going to give you choices, right? So here we go. Okay, let's start with the long side. So we have a company called Celestica. And you can see this company has done extremely well. This is a long-term chart. It's like a 5-year chart. The point here is I'm showing you a weekly. You could see a little bit of weakness on it. I normally don't like to bottom fish, but this market's maybe, if you're a long person, is trying to give you some potential for a bounce. And so you could see this cut through the 50-day moving average and bounced off the 200. Let's look at it on a daily. On a daily, you could see it hit 144, and then it's cut in half, 78.33. And now it looks to be bouncing. Here's what's going on: 246 to 388 to 482 to 584 in earnings growth. So the earnings growth is nicely intact. This could be just a stock that's on sale, and it's cut in half by 50%. Of course, it's bounced now but to 96.58. But there's your first one, is CLS, Celestica. Okay, now let's go to the short side. The short side is interesting because they're going to look totally different. Look at this chart. Let's start with the weekly, and we can look at the weekly and go, wow, this is like an upside down U, right? And so why? From $12 to $8 to $6 to lower sixes, this is not 18 anymore, right? Like it was 5 years ago. And so companies trade on their earnings, their forward earnings, and this company has done pretty poorly, at least in the last year or so. So you could see it was well over 100, and now it's at 71. So not a big mover, probably kind of a boring stock, but you can make money on boring stocks too. To me, this is rolling over. Let's look at the daily. We look at the daily. This stock is just in trouble. It's below the 50. To me, it looks like it's going lower. It's gapping down, not on huge volume, but there's no support. And so that's your second one, and that is a short one. Let's go back to the long side, and this is a Chinese company, JD.com. JD is the symbol, and you can look at the weekly. We'll take a look at the weekly. This is a lousy chart, isn't it? And then all of a sudden it starts to come up the right side of that, and that's what you like to see, is you like to see this building. 312 to 426 to 469 to 509 in earnings, nice earnings growth. And we've got a chart that really looks like it's healthy in this market, especially, not like the last one, right? And it's hanging out above the 50-day moving average. On this chart, it's a weekly, so it's a 10-week moving average. But if you look at the daily, you can see lots of gaps up, right? Gaps up are interesting, and they're on high energy. And so those are telling you that the buyers want to jump in, and they don't even want the stock to pull back. We've had gaps up on high volume for a while. And this one, it's just odd. This is an odd-looking chart, isn't it? So, but it's above the 50-day moving average, and it's above the 200. It's got good relative strength. JD is a long choice for me. Now, let's go back to the short side. You aren't going to like this, but Nike is a short, in my opinion. And you can just look at this chart. It can't get its way over the 200-day moving average, the 40-week moving average, this black line. Notice that it just can't do it. Why? Well, it can't grow its earnings, 323 to 395 to 212. It's not growing its earnings, and the market is punishing it. And in this market where you're seeing this big volume spike down at a low that isn't even comparable to this chart, this is not good. Nike, NKE, to me, is a short. Now, I'm going to go back to one of the strongest groups. You could pull up all the insurance companies, and they're all looking like this. They're all at their highs. They're breaking out. This looks like, to me, a breakout right here. So it's right at that spot where if you want to get involved, it's breaking out and the volume is increasing. It's nice and above moving averages. Looking at the daily, look, this is a beautiful looking cup right here. And maybe you can even look at it as a cup with a handle here, and the breakout point is there. I still think the breakout point is around 210. And so that's where I would draw that line. So you got an early entry if you got in here. If not, you're right at the breakout point. Anywhere in here is probably good. High relative strength group, high relative strength stock, Allstate. So that is the long side. Let's go back to the short side. This is a stock that I'm doing covered puts on. You can follow other videos on the YouTube channel or the Rumble channel, and you can see that I've got some covered puts on this. So I believe that this stock, let's look at the weekly, you can see it is rolling over. Then we had a death cross, a couple of months ago, and this stock just can't get up above the 50-day moving average. Why? They're a housing company, right? This whole sector is getting hammered. Why? Interest rates are high, housing prices is too high. Lowering housing prices is going to lower earnings for these companies that still have inventory. D.R. Horton is the highest, or probably the leader in this group, and so therefore they are prone to correction. So I'm doing well on my covered put. I don't know if it'll continue, but this stock just can't seem to get above its 50-day or its 10-week moving average. Notice every time it hits the 50-day, it pops back down. I don't know if that'll continue. Maybe it will. But it's getting to the end of this little leg. I don't know how much more there is left of it, but D.R. Horton to me is a short, mostly on the macroeconomic picture of the U.S. economy. All right, let's go back to our last one, and this one doesn't fit most of my criteria, but this stock, if you look at it, was over 200 a couple of years ago, or just over a year ago, I'll say, and now it was under 100 just last week. Okay, so I started to look at it and go, wow, this is a chip stock. We need chips. They're trying to bring Taiwan Semiconductor over here, and NVIDIA wants to invest all this money. We need chips for AI. Why is the stock so hammered? So this is a little bit of a bottom fishing stock. I'm not a bottom fishing kind of guy, but if you're looking for a value play, something that's gone down probably way too much more than it should have, you can look at its earnings. In 2022, 350, then it dropped. Then it back to 331, 468, and next year it's supposed to be 621. I mean, if any of this stuff comes true, this stock, could be doing one of these numbers, where it goes back up. So I'm looking at the weekly. Now look at the daily. You can see it's been living under the 200-day moving average for a long time, and it's been living under the 50-day moving average for several months. And now, will that change? I don't know. It's making lower highs and lower lows, but boy, I'm looking at this. If I get some kind of strength where this thing starts to pop back up over some of these moving averages, I'm looking at it to go long. So there you have it. There are 4 stocks that I just gave you that are on the long side. If we get out of this yellow market and we go green, which could happen in the next 3 or 4 days, or if we go red, which could happen in the next 1 or 2 days. And if we go red, you got some short calls. Stocks that you can do. If we go green, you got some long ones. So trying to give you a smattering. I'm not telling you which way the market goes. I'm leaning that we're slightly red. I don't see a lot of reasons we're going to be pulled out of this kind of funk that we've been in for the last several weeks. But I don't know. That's why I use a market timing system, and so should you. There's some ideas for you to start your research. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.